please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Kunal Desai of Mobius Capital Partners is now joining us from the sidelines of the IIFL's Invest India conference in London. Kunal, thanks very much for joining us. Let's begin by talking about India in the context of emerging markets. We've seen money moving out of emerging markets and money has gone back home to the US. And this has happened all through the course of this year. What is your broad view on emerging markets right now? And if you can talk specifically about Asian emerging markets.
One of the reasons why emerging markets recently have been under stress is largely through some idiosyncratic issues in some pockets of the emerging world. Clearly what's happening in Turkey has worried some investors, but really what we're believing in and what we think is that there's pockets of value now emerging across the emerging market. When you think about them from an external vulnerability perspective, clearly emerging markets have much stronger macro scorecards than they did in 1997 or even during the taper tantrum in 2013. I think most importantly, though, the health of corporates and companies is far stronger than it has been in a long time. And this is because over the last 6, 7, 8 years, a number of companies have been paying down debt, strengthening their balance sheets, becoming far leaner businesses. And I think they're in a good position now to take advantage of resurgent growth.
What is your assessment of the impact of the rupee, which has weakened quite a bit, and oil, which is quite a bit higher now, playing out for India? I mean, Indian stocks essentially.
So I think one of the interesting things about the dislocation between the macro in India and the micro in India is something that has surprised a lot of investors this year. If you were asked at the beginning of the year if oil prices would be where they are and where the dollar would be this strong, how the Indian market would have performed, I think many people would have expected a far more negative return than what's materialized. And I think there are a couple of issues at play. I think when you do get this investor anxiety or risk aversion in emerging markets, there typically is a flight to safety within the emerging world. And I think India's macro scorecard has been stronger than other players, even though it has deteriorated recently. And secondly, it comes back to this question of what we're doing as investors, and that is investing in companies and their cash flows. And I think the discerning or the discriminating way in which companies have improved their return ratios, they've improved their balance sheet structure, has allowed investors to view them much more favorably in a more challenging macro environment. So, where we are today, it's perhaps surprising that the Indian market has held up so much, but I think that's the change in investors' perception, that it's the micro that matters much more now than the macroeconomic noise.
Okay, what are your top India ideas, Kunal?
With India, you have a huge array of very strong business models. You have secular growth, which is the same and is accelerating in a number of subsectors. One area which we're particularly interested in at the moment is within financials, and in particular the small finance banks. So companies who have invested in improving or extending their branch network, they've taken the time to become safer business models through taking on deposits, and are now seeing operating leverage move in as loan growth accelerates and credit quality improves. So financials, particularly in the smaller cap or mid-cap part of the market, good quality businesses with strong management teams, I think are particularly attractive. One other area which I think will incrementally get more investor attention is in the pharmaceutical sector. Clearly there have been a number of companies been under stress. They've had all sorts of issues, from FDA concerns to buyer consolidation in the US. But I think they've now reached the point where there are a lot of attractive opportunities, given the resilience that they have, strong balance sheets and a very strong domestic product profile. So those two areas, I think, will be particularly interesting, particularly if you have a view that the dollar may result in further appreciation. And I think these two sectors offer good value at the moment.
Okay, sure. You mentioned financials. What would your view be on banks?
On the banking sector, clearly there's a split between the public sector undertakings, the PSU space, and their private competitors. Whilst you've seen some of the more corporate-focused lenders, such as ICICI and Axis Bank, face longer issues, particularly on their asset quality, I think at the margin now, that for us is beginning to come to an end. From a public sector perspective, I think there are still issues at play. I think capitalization or recapitalizing their banking or their balance sheet still needs to continue. So we're perhaps a little bit less optimistic or a little bit more negative on that side of the market. But really it's the more niche, nimble, lean businesses who don't have the sunk cost or sunk investment of having been through that last credit cycle that are most interesting to us. So your classic microfinance players who are now moving into vehicle financing, I think that's the more attractive area of the market from a financials perspective.